time to record this video here. So let's take a moment to determine, how do I determine my risk when I want to take a trade? How do I know to pull the trigger on a trade like this? So like, as you can see here, we have a beautiful pattern being set on the SPY after this FOMC notes and the Fed. Look at it, we had an awesome rally here, but now it's starting to die out. We're getting nice little patterns here that, hey, this may start to reverse here. So I'm like, okay, well, if I decide to get in here, my stop is going to be here around 283.49. And if you have a small account, let's say you have a $3,000 account, you know, what are you looking at as far as how much should you put into at work, or how much are you willing to risk? So let's say we are going to have our stop here at if the stock hits this price here of 283.50, let's say, right? We're going to get in here, and let's go ahead and take a look at the stock, okay? Or the symbol here, we're going to do SPY, and we're looking at puts. So let's get rid of this. All right, so 283.50 is going to be my stop, and I would want to ideally, you know, if you have a $3,000 account, you don't want to put more than half of the account at any given time at work, so you always have money to play with. Since this is a SPY, and I'm fairly confident on the move, I'm going to go ahead and give myself a, I'm going to use 50% allocation, basically. So I want to use $1,500 of my capital to put in this trade, which is where the price is at right about now, basically 150, 149. So I'm going to go ahead and just keep it nice and even at 150. So I'm going to go ahead and analyze that and take a look. So it's basically, guys, take your time analyzing and paying attention to what you're doing. You don't have to rush into a position. Just take your time to take a look and see what would happen if you know, set this up the right way. So this is where the price would be. At 150, this is where we would be. So as you can see here, pay attention to the PL theoretical and PL at expiration. So our stop is going to be 283.50, which is this area here. Even here is trying to say, hey, we'll probably be in the green. So again, these are estimates. But as you can see, your loss would be minimal here. You know, even though it's saying at expiration, your loss would be 102. Right now, because the position is still has a couple of days to expire, you would probably only lose maybe $20 or something like that. Your full risk is 150, actually 1,500. Hold on, let me go ahead and adjust that. All right, so here we go. 1,500 is the full risk. At 283.50, you're looking at a max loss. Even though here it says 226, you still be in the green. Count on losing around $100 to $200. Let's say if it goes against us. It's probably going to be less than that, but worst case scenario, I wouldn't expect that we would be in the green right away because this is adjusting, remember, according to this price here. The mid right now is at 154. So if we bought it at 150, it's just saying, hey, when it moves up here, you'd be losing, or you still be up. But we're going to calculate that we'd probably be down anywhere between $50 to $200. So here you can clearly see, okay, well, my stop, it's pretty nice. It's a fair move. I'm probably not going to lose too much, and I still have a nice target. So let's go ahead and take a look at the chart. You know, this is a pretty big move. So even if it comes back 50% of the move, you know, if you're using the Fibonacci's or even the 28 Fibonacci here, even to this 200 MA, that's a nice move. You're going to make a nice little profit. And if you layer into this, you have 10 contracts, you can start taking profits all the way down or hold some small position for the next day. So when you're looking at everything, okay, well, what am I risking? You have a $3,000 account. And a $3,000 account, you have 50% allocation, so you still have some money to trade, adjust, or make any additional trades. But on this case, you're like, okay, well, I have 50%. I'm willing to risk no more than 5%. With 5%, you're looking at about 150 bucks, guys. 150 bucks. And here, it's a perfect scenario. It's a perfect example. I mean, you're not really gonna let it go that far away. It's not gonna go too far. You're getting in on a decent pattern, and it probably wouldn't even hit $150, to be honest with you. But this is how you go about to kind of determine that and go about making your decision. So let me move it to 160, right where the mid is. Let's take a look here. It still says that we would be in the green, but I know for a fact you wouldn't. Just because obviously it's going against you, depending from where you got in. But your loss is going to be very, very minimal. And that's what I'm trying to emphasize here. Take the time to analyze the trade and pay attention. Hey, well, my stop is here based on this, but you have to kind of look at it and say, well, Okay, that's where my stop is on the chart, but can my account handle that move? And that's how you have to kind of look at things before you even put in the trade. That way you say, okay, well, this is my stop. Let me make sure I can handle that move. And if it's too much, then you may need to say, okay, let me lower the amount of contracts, or let me trade something else because I can't handle that move for that stop. But, you're giving yourself a good enough stop that you're going to let this move play out, but it's safe enough where it's like, okay, you know what, if it breaks above that, it'll probably keep rallying, so I'm going to get out, and that's it. So that's pretty much it, guys. It's a pretty simple example here. I'll try to add more as I have more examples happening live like this, especially with the spreads, as I keep trying to emphasize. But this is a good catch here. I wanted to make sure I got this out to you guys as soon as possible.